Hi guys, and welcome to this week's edition of our weekly forecast, where we're going to look at a few chart examples on what we expect the market to be doing in the coming week. So we're going to look at dollar index, USD JPY, and Euro USD. And lastly, I'm gonna show you a great example of a buy model which I executed on Swiss franc against the Japanese yen. I'm just gonna show you in hindsight what the buy model really looked like and how I executed the trade. So first things first, we're going to look at dollar index. So basically this is a follow-up forecast from last week's video, where I was anticipating the market to push further to the downside on the dollar index. I was expecting further weakness, in fact, and that's exactly what we saw. We saw price pushing all the way down to clear up the sell stops below 92.80, and yes, we had a bit of a retracement to the upside. That was on Friday, I will say after FOMC, and but the main objective was achieved. We were expecting weakness to come into the dollar. So now for the coming week, we really need to see exactly how Monday's range go by. Like the trading range for Monday is going to be crucial to the setup that I'm going to discuss with you guys in this moment. So I would expect the retracement to push a bit up. I would expect probably price to reach out for 93.50 or 93.80 price point. So expect dollar index to erase a bit of the losses from last week. But yes, long-term wise, we are in a sell model. Long-term wise, dollar index is in a bearish institutional order flow. Whether it's from a daily or weekly or monthly, we're in a bearish institutional order flow. That is to say that premium areas such as bearish rejection blocks, bearish order blocks, bearish fair value gaps, and bearish liquidity voids are holding price and pushing the market to the downside. So you need to ask yourself, where's the liquidity draw? Where's the market gonna rally to for you to consider yourself a seller on dollar index? You see, so those criteria that I have just highlighted, those are the ones you should focus on. You see, so most of the guys in the group, you are all now well familiar with a bearish order block, but fair value gaps, they are also quite crucial, of which we currently have one on a monthly chart. Of course, this is a long term. We've got a fair value gap from this low to the current price action. You see here, we haven't had price trade back up. As you can see, price is being offered to the downside. You see, there's imbalance there. So expect a bit of a correction to the upside eventually, but not like now. Eventually expect the market to reprice to the upside in order for it to balance this whole liquidity void. So now looking at dollar index on a monthly chart, I'm expecting a bit of a retracement, 94.80 or even not 94, 93.80 or 94 price point. That will also be dependent on what the fundamentals are actually saying. So as it is, the sell stops below 92.30, right? 92.30, which is this last down candle here. Of course, we've got another down candle here, but it doesn't close below. So this last down candle becomes our bullish order block, this one here. So this is our monthly bullish order block. So I still expect price to push into the bullish order block. So already so that means we're going to have a new month candle when the market opens. It's going to be a new month for August, and I'm still expecting price to push to the downside in August. So we can see July we closed above after clearing the stops here, right? And we closed exactly at the low of this candle. So I'm expecting the beginning of August, or the first 2 weeks of August, we could get a retracement to the upside. 94 price point or 94.50. This is your potential area of selling way into the bullish order block. So now let's go to a weekly chart. Let's go to a weekly chart and see what kind of price action we've got on the weekly chart. So on the weekly, we can clearly see market price is being offered only going to the downside. So I would expect a bit of a correction to the upside all the way to 94.50. So 94.50 is crucial in our short selling on dollar index. 94.50 is going to offer us better chances to take the market to the downside. That is on a weekly time frame. The moment you see 94.50 being tested on lower time frames, you should be hunting for bearish order blocks, bearish rejection blocks on lower time frames for you to load your shorts going to the downside. So now I'm gonna go on to a daily time frame. As you can see, the zones that I marked, guys, these zones are marked from the last week mentorship video. I haven't changed, they're still there, you see. So I expect price to push, I'm expecting the dollar to push to the upside, right? And once it reaches 94.50, that's when I'll be anticipating short trades. Yes, the current price action where we are right now, it's also a good area to hunt for short positions, but we need to wait and see how Monday's trading range is gonna pan out. You see, Monday's trading range is very crucial to this setup, because probably market can open with a gap to the downside or gap to the upside. Then you'll be like, okay, what am I supposed to do? So wait for Monday's trading range, and when Monday close, then you need to take action. You do your analysis and you come to a decision. So now I'm gonna go on to so as it is, we are in a sell model. Remember that. That means short trades are ideal. We are hunting for weakness on dollar index. As you can see, we've got a bearish order block here, and then we've got stops. We've got sell stops above. We've got sell stops above here. So expect price to trade to this area, or even to these two equal highs here, right? That is to trade into this bearish order block before you can start anticipating lower prices. Or it can clear up all the buy stops above here, right? Market can go all the way. As you can see, 94.50. Price will not just clear and close above. If it does close above, then you're hunting for short trades in this range here. You see, this is your ideal area to take the market to the downside. So already I've given you guys the scope or the structure, the trading range that you have to be looking out for. You see, you need to be in a position to have that in you. You know what you're going to be trading. So where price is right now in this rejection block here, this bearish rejection block, see that block there? That would be also an ideal area to hunt for short trades on a short time frame, because now we've got a bullish order block here. This is our last up candle, you see, and already it has been respected on the first test. Market dipped into the order block, price rallied away. We've got a supply zone here, market rallied, to the downside and never looked back. When price came back, it offered a good opportunity to take what? Short trades on lower time frame, right? So right now we are in that bearish order block again. So now we've got buy stops above here, right? We've got buy stops above here, and including this high. So you can clearly see those are probably like two, they're classified as two equal highs. You see, obviously the candles are not going to be like exactly to the pip, but those are what I would classify as two equal highs. So I'll probably wait for market to clear up the buy stops above there and then push to the downside. So that's pretty much about it on dollar index. So we are in a sell model, so that also translates to USD/JPY. We are also in a sell model on USD/JPY. We'll be hunting for short trades to the downside, and as you can see from last week's price action, the buy stops, the sell stops, all the sell stops that I anticipated last week to clear, they've all been cleared, and we have closed above. So I do expect August to open again and tumble to the downside. You can see the rejection that we had. So this is last week. Last week price was very aggressive going to the downside, but the sellers, they couldn't hold price to the downside. The buyers came in after price had cleared the sell stops and then rallied to the upside. So now I do expect again price to push to the downside, since we are in a sell model on dollar index. USD/JPY also has to trade lower, so you'll be hunting for bearish order blocks, bearish rejection blocks, bearish fair value gaps on USD/JPY. That is what you're going to be hunting for. So once you come to a lower time frame, you see like now we are on a daily time frame. You can see we've got a fair value gap here. Let me just highlight that. We've got a fair value gap between this low and the current high, right? So expect market to trade into this range, right? You see, expect price to close the what? The gap, the bearish fair value gap. So only when price reaches this area, right? When price reaches this area, or 50% main threshold of this up candle here, then you have to anticipate what? Price to trade to the downside. I hope you get my point, guys. We've got a fair value gap. Those in the mentorship, you know exactly what I'm talking about. If you have any questions, just send me a message. Expect price to close up that fair value gap. If it doesn't, but eventually it will close up this fair value gap. So in this range here, this is where you have to hunt for short trades to the downside. As you can see here, price was offered massively to the upside, yet we are in a sell model. So this imbalance here, expect price to recorrect that quickly on USD/JPY. That means short trades are ideal. So if I go to a lower time frame such as H4, you can see where price closed up. Come Friday market close, we were testing this bearish order block. So above these two equal highs here, above these two equal highs, we've got buy stops, right? We've got buy stops above these two equal highs. So expect price, right? Expect price to trade clear those stops, and then market should follow the higher time frame momentum, which is bearish. If price does close above, right, then you have to wait and see the price action. Only when it closes below the buy stops, then you have to short the asset. But if it closes above, then you need to wait for this price action to be tested first. You see here, we had this whole consolidation which market rallied away from, you see. So there's a whole lot of imbalance there. So expect price, even when it comes up here, expect price to go to the downside. So that's pretty much about it on USDJPY. We are also on a sell model. Then eventually, finally on Euro USD, we are in a buy model. On a monthly chart, you can see already a strong bullish momentum. We've been in a buy model on Euro now for quite some time. I think the past 4-5 months, we're in a buy model coming off this higher time frame demand zone. We are in a buy model coming off this higher time frame demand zone. So now ask yourself, where's the liquidity draw? Where's the market gonna go to? Where is it heading to? So you can see here, on its own, this should be of interest to you. That's where the market is being drawn to. That's why I was like, after FOMC, I told you guys, Euro USD to the moon, $20. It's not an insurmountable level on fiber. It can easily be reached. Already we have reached as high as $19. So $20 is not that much of a difficult price point to reach. So this is the price action that I'll be anticipating on Euro USD. So we are in a buy model, right? So in a buy model, you need to be looking out for things like bullish order blocks, bullish rejection blocks, and bullish fair value gaps. That's what you have to be looking out for you to consider entries on Euro USD. So if I come to a weekly chart, you can see we tested this imbalance here, which was eventually filled here, right? So we've got this high here, the high of this candle here, $19.95, and the current high, last week's high, right, which is $19 net. So expect a bit of a correction to the downside. You see, market cannot just trend all the way up on a higher time frame without correcting to the downside. So if you go to a daily time frame, that's where you're gonna see exactly. So I gave you guys an assignment. Remember this down candle here, it did offer us a great opportunity which most of the guys took advantage of, and the market traded to the upside. So this down candle here on Euro USD, the down candle that's coming in with the close of 1.17146 is gonna offer great opportunities to trade to $20 as your target. You see, that's like 300 pips being offered from this down candle here. Why this down candle, right? Why this down candle? Because that is our bullish order block. Simple as that, guys. You don't need to complicate things. It's simple as that. But you need to know now, once the market reaches there, what price action do you have to be hunting around for? You see, the down candle came in this range here. So price is now back again at that area, right? We are back in that zone again. So now we need to wait and see how price approaches this whole consolidation, right? If we dipped into it already, you can see we've got sell stops. We've got sell stops below here, right? There's people who are long, right? They've got their sell stops below, right? So every level that I've marked is going to be a great opportunity for you to take the market to the upside with your stop loss down here, right? That's how institutional trading becomes easier once you know exactly what you are looking for. You see this down candle here. Let me highlight it. So now I'm on an H1 chart. Let me highlight this down candle, right? Once I've highlighted it, I'm gonna go to an H4. You can see the range now. You see? So we've got a down candle there on the H4 chart. This area is gonna offer good opportunities to take the market to the upside. Of course, you're gonna have to have a tight stop loss. So if you go to a lower time frame, you can see already the rejections that are the way price is rejecting lower prices. Remember, this is Euro USD, guys. You can get like 50-60 pips on the go, just like that. So that's what I wanted to share with you guys. I don't want this video to be a bit long. It's already 20 minutes into this recording, and I've realized that most people, they really don't watch the whole complete video, which is a shame. Yeah, because the effort that goes into this whole analysis is quite tiresome. So yeah, that's what I wanted to share with you guys, especially on dollar index. Make sure you know exactly what the dollar index is doing. Then it becomes easier for you to take positions on USD JPY, Euro USD, USD CAD, or whichever other asset that has got dollar as either the base or the court currency. So now, the other thing I wanted to show you is the buy model on Swiss franc against the Japanese yen. So you can see last month, July, we traded higher. We've got 2 consecutive strong bullish candles to the upside, and you can see already that price, the liquidity draw on this asset is up here. Price is being drawn to these highs. You see, there's no denying that. You see, it's a fact. You can see we've got these 3 equal highs. This is where price is being drawn to, right? Those who have watched ICT's videos, there's the price action model number 6. That's where he talks about this model. So looking at CHF-JPY, it is also in a very strong buy model. So long positions are ideal on CHF-JPY. So let me just mark out the levels that I would like you guys to focus on. We've got the high on this candle here. This is our old high. The old high is coming in at let me just see, where's the high? 114.58. So we got 114.58. 114.58. So that's an old high, right? Let me just put that right to the point. Remember, an old high is crucial in your analysis when price comes back to that level. So it's a monthly zone. I'm gonna put it a solid line. So we've got that old high, and then we've got the liquidity draw where price is being drawn to. That's the high of this candle is coming in at 118.53, right? So I'm just gonna round out that number to 118, right, to an institutional price point, and then let me just put 2021 there, right, to extend my line. So price is being drawn to 118. That's where all the buy stops are, right? We're in a buy model, you see. So expect price to trade to the upside. We're in a buy model, right? Oh, sorry. We're in a buy model, and the sell stops now on this chart here, they are below the old high. We've got sell stops below there, right? Remember, I'm on a monthly chart, so we've got our sell stops below there. Already, there's nothing more that you need me to do here. If you're in the mentorship already, you should know exactly what to look out for. Remember, we're in a buy model, so you have to look out for things like bullish order block, bullish rejection blocks. You see, bullish fair value gaps. So now when I go to weekly chart, let me just zoom out a bit. Weekly chart, you can see already this is the old high, right? Below that we've got sell stops. So you would be anticipating market or price if it trades to this range, right? It's in this area that you have to hunt for long trades targeting 118, right? That's a setup. That's a clear setup, because already these highs, they've already been violated. They've been cleared up already, right? The liquidity there, they've been cleared up. So this low, you don't expect price to come retest that low again. If it does come, it means this structure is violated. It's no longer valid. And you could see further price pushing to the downside, right? So expect the sell stops. If price does trade lower, expect the sell stop to be cleared. That's when you should be loading your long positions during that scenario. Remember, you buy when they're selling, you sell when everyone else is buying. You see, remember, most of the people that lose money in this profession, they're the retailers. Just do the opposite of retailers, then you'll be fine. You can see already here, this was a very perfect executed buy model. This is the one that I managed to cut. I got about 120 pips from this move here, because I was expecting this range to be tested, and then once it's tested, it closed above. That was where my entry was. My entry was in this rejection point here of this candle. This is where I got like quite a few 120 some pips. You see, so expect price to retest that level, and once it does that, you can see already on a lower time frame we've got a demand zone here. You see, we've got a demand zone, and then we've got our bearish order block on H4. You see, this is our bearish order block, right? Just put it all the way to 2021. You see, this is our bearish order block, so that when price comes back into this range, you are anticipating long trades. So yeah, I think that's pretty much about it for today, guys. And if you have any questions, those in the group, if you have any questions or any additions that you want me to make, just send me a message, and I'll gladly help. But with that being said, I wish you guys good luck and happy trading in the coming week. Thank you.